Hey, stop scrolling and look at this setup right here. Can you see that you can catch multiple spike on boom and crash with just simple setup? Grab a seat and come closer. I want to show you the setup that you can use to catch multiple spikes on boom and crash. Let's get right into the video. Hi, welcome. In today's video, I'll be showing you how you can catch multiple spikes like this. Can you see this? Multiple spikes like this on boom and crash without making losses. Okay, and this strategy can also be used for scalping, like you can see right here that I got into trade. You can scalp little candlesticks and make profit. Okay, I love scalping, and that's why you can see I am currently scalping. Okay, but I know you like catching spikes, right? So I'm going to show you how to catch these multiple spikes using this strategy. Okay, so it's a very simple strategy and is beginner friendly. As a beginner, it's the best strategy that you can use to start making profit right away. Now let's look at how this strategy works. So looking at my chart right here, you can see that we have some indicators set up, right? Okay, so we are currently expecting spike right here, and I'm gonna close this trade, okay, because that is a resistance zone and spike is likely gonna come. Okay, so I'm gonna close it. So we are currently in $1.32. Okay, we have 4 open positions like we always do, so that's about $6. So that is profit. So let's check out how this strategy works. Okay, so this is the best strategy you can use to start catching spikes or scalping boom and crash as a beginner. Okay, now we have on our chart we have indicators, 2 indicators that you just have to set up. So easy, and you start using it. Okay, now let's look at how you have to use this indicator. This is the 1 minute time frame. This indicator can be used on any time frame, okay, depending on the size of your capital. Okay, so if you have a big capital, you can use it from 5 minutes, 15 minutes time frame, okay, or 1 hour if you have a big, very big capital. But if you have small capital, you will want to stick to the 1 minute time frame. Okay, so in order to use this strategy, you have to identify your support and resistance zone. Okay, identify your support and resistance zone. Let's check the higher time frame. Okay, so on this is the 15 minutes time frame. So looking at the 15 minutes time frame now, you can see right here that you'll be able to see when price hits the resistance zone, right? Like here. Okay, price hits a resistance zone right here, and price hits what? A support zone right here. So you have to ensure that price has reached your support or your resistance zone. Okay, so if you want to catch spike, we'll be focusing on when price has reached the support zone like we have right here. So when we notice that price has reached a support zone, we have to look at our indicators on the indicator window. So on the indicator window, we have just 2 moving averages. Okay, we have 2 moving averages with different setting. Okay, one of them is the EMA and one is the SMA. I believe you know what that means: the exponential moving average and the simple moving average. Okay, so we have the moving average. The moving average is very, very powerful, and people often overlook it, but it is very powerful. So we have 2 moving averages. We have the blue moving average and then the black moving average. So in order to catch spike using this strategy, I haven't identified that price has reached a support zone. Okay, so this is our support zone right here. So we identify that price has reached a support zone on the higher time frame. Then we also identified that price was initially what a bearish trend. Okay, price was initially bearish. Okay, and I can see that price has also changed his character. Okay, you know, price was initially going downward like this, and when you see it now, you can see that it's now going upward. That is a change in character. Okay, so that's the change in character. You know, the price was initially moving like this. Okay, lower highs and lower lows, lower lows and lower highs. Can you see that? It was initially moving like that, and now it has changed to moving upward like this, higher highs and higher lows, higher highs and higher lows. So when you notice that price has changed its character, okay, at this very point right here is when price changes character. Now let's look at the chart. So where do we identify when price change character? Right here. Can you see that? Right here. So price changes character right there. So you have to also identify a change in character. If you don't know how to identify change of character, I have a video on the channel. Okay, this video right here, you can go and watch it. Okay, so you know how to identify a change in character and a break of structure. Okay, so now let's proceed with a strategy. So having identified our support and resistance zones, okay, now marked out our support, we have to head over back to the 1 minute time frame, okay, or 5 minutes time frame, whichever one you are using. Okay, so on the 5 minutes time frame, this is 5 minutes time frame. On the 5 minutes time frame, we can see that our moving averages have a cross right here. There's an interception. Can you see that? There is an interception. And let's check the 1 minute time frame. Okay, now look at the 1 minute time frame. So on the 1 minute time frame, we can also see that there is an interception. Can you see that? There's an interception. So each time our moving average, the SMA and the EMA, each time they intercept each other, okay, spike is likely going to occur. Can you see that? Each time they intercept each other, spike is likely going to occur. Let me show you that in another scenario. Okay, now look at it right here again. Can you see that interception? Okay, that cross between the blue and the black moving average, the simple moving average and the exponential moving average. Can you see that cross? And when that cross happened, you can see that initially it's been trending downward. There's no cross, okay, but when it intercepted, it started, it changed direction and started going upward. And you can catch these whole lot of spikes, guys. You can catch the whole lot of spikes. Okay, now so you have to look out for the period at which moving average intercepts. Okay, so when the moving average intercepts, price is gonna come in. Now before that interception, some spike might have occurred, like 1 or 2 spikes might have occurred before that interception. Okay, let's look at this place again. Can you see that? Look at that beautiful interception. And what happened next? It was spike all the way up. Okay, so when that interception occur, you have to wait for the price to pull back to the simple moving average. Okay, let it pull back to the simple moving average. So when price pulls back towards the simple moving average, that is when you enter and you are going to catch multiple spikes. Okay, so that is how to use this strategy. Is very easy. Okay, now let's look at how to use it to scalp. Like I was using it to scalp. You can see that if I had head on to that trade, but I didn't want to take chances. Okay, I think we exited at this level and it's still going downward. Okay, so like spike can come anytime, so that's why I had to exit. Okay, so that's why I had to exit, so I don't lose the little profit I've made. It's good to secure the little profit you've made and don't be greedy. Okay, so if you want to scalp with a strategy, is just like the same explanation I've given. All you have to do is identify a resistance zone. Okay, identify a resistance zone. Can you see that? Identify a resistance zone. So when you see a time when spike has been going up, okay, it's been spiking, and when it gets here, it's no longer spiking that high. You can see initially, you can see it was spiking, making higher highs, right? Higher lows, spiking, higher highs, higher lows, and higher low. Okay, and then right here, it did not make a new high. It didn't make a new high, so it has reduced its momentum. So when you also check this place right here, it didn't make a new high. So right here we can classify that as triple top. Okay, we can classify this right here as triple top. Can you see that? So when you have triple top, price is likely going to go downward. So when price has been rejected at a particular spot twice, price is likely going to change direction, and that's exactly what happened right here. So you can see that when price hits a resistance zone right there, and when you look at this place, there's been a change of character. Can you see that there's been a change of character? So after that, what happened next was the moving averages crossing each other. Can you see that that interception occurred? Can you see that? And after that, price started heading downward. So that is how to use this strategy, and it's very simple. Once you go over to your chart and check it out, okay, it can also be used on crash. Okay, let's check out crash. Okay, so this is crash. Okay, this is crash 500, and you can see what we have explained on boom. You can see that nice interception right there, and what followed was what spike. Can you see that it was spike all the way down? So this strategy works perfectly for all the boom and crash, be it boom 500, boom 1000, 300, anyone. So you can use it to scalp, and look at it right here also. You can see that interception, and what happened was a buy all the way up. Okay, so when you are scalping, ensure you don't scalp for too long. Don't scalp for too long. Just get some candlesticks and get out. Okay, so you don't get hit by spikes. All right, let me give you the setup of these two efficient indicators. Let's head over to the indicator window. Okay, so these are our two indicators we are using today, just the moving averages with different settings. Okay, they have different parameters. So let's look at the first moving average right here. Okay, and that is the moving average. The parameter is period 20. Can you see that? Period 20, the shift is 0, the method is exponential. You have to take note of this, okay, because the method of this moving average is not the same with the next moving average. So you have to take note of it. The method is exponential, and then you apply to close. So you can take a screenshot of it, then you choose the color you want. Just choose the color you want, and I use the black. So choose the color that will be visible on your chart, and after that you click on save. So let's check out the second indicator, which is moving average period 50. Can you see that? So period 50, okay, shift is 0, the method is simple. Can you see the difference between the first moving average and the second one? They have different methods. Then the close, and then you apply to close. Okay, then choose any color of your choice, and I used blue. Okay, so moving average is so powerful if used correctly, and you can make massive profit using this simple indicator. Okay, so these are our indicators for today. I want you to go over to your charts and back test it, ensure you try it out. Okay, try it out to see if you get amazing results. All right. Okay, so you can see that at every time when I scroll backward, okay, at every time there was an interception, you are gonna get spike. Okay, can you see that? You are gonna get spikes, and you're gonna catch multiple spikes using this strategy. So this is this lesson for today. If you got value from this video, I want you to hit the subscribe button, like this video, and share it to friends that need good trading strategies to trade. Thank you for watching. Bye.